Okay, guys, we are going to be looking at the CPA practice test sample questions, business environment and concept section part 1 of 2. I'm at the University Library, so excuse the students. If you guys hear them talking, excuse them. Sorry about that. Again, this is Tao Chai. Okay, so let's go. Let's start off with a little inspiration. So, if your dream doesn't scare you, they are too small. Richard Branson. So, our question is which of the following decision-making techniques is most useful to a manager who is attempting to increase the profitability of an area, but who has a problem with limited capacity for operations of a critical machine? So, our options are theory of constraint, economic order quantity, balanced scorecard, cost variance analysis. So the answer is theory of constraint. Okay, so let's look at theory of constraint, what it is. Bottleneck, theory of constraint, and throughput margin analysis, right? So I'm going to explain how to manage bottlenecks, right? Keep bottlenecks busy and increase the efficiency and capacity by increasing throughput contribution margin. So suppose PRSM engine must go through a forge operation before it goes to assembly operation. The company has 1,200 hours of daily forge capacity dedicated to the manufacturing of SM engines. The company takes 3 hours to forge each SM engine, so PR can forge 400 SF engine per day. And then recall that it can assemble only 300 SM engine per day. Okay, the production of SM engine is constrained by the assembly operation, not by the forging operation. Okay, so remember that, that's very important. And take a look at what I got down here. Okay, so the theory of constraint, TOC, describes method of maximum operation. Income will face with some bottlenecks and some non-bottleneck operation. To implement TOC, we define and use 3 measurements. So throughput margins, that is equal revenues minus the direct material cost of goods sold. Then we got investment equals the sum of A, material cost in direct material, work in process, and finished good inventory. B, R&D costs, and C, capital costs of equipment and building. All right, and then we got third, operating costs, which is equal to all costs of operation other than direct material incur to earn throughput margins. So operating costs include such costs as salaries and wages, rent, utilities, and description. The objective of the TOC is to increase throughput margins while decreasing investments and operating costs. The TOC considered is a short run time horizon of a few months, and assuming operation costs are fixed and direct material costs are the only variable costs. Okay, so just it's important. So when we use TOC, just keep in mind that this is a short run time horizon of a few months. Okay, so that's going to be the most efficient time to use TOC. I'll explain later about that. Okay, so in a situation where some of the operating costs are also variable in the short run, throughput margin is replaced by contribution margin. So that is revenue minus direct material costs minus other variable operating costs. In the PR example, each SM engine sells for 800. We assume that the variable cost is 560. All right, so, and it consists of direct material costs. And then we incur that in the forging department. So throughput margin equals contribution margin. Okay, so we're going to use contribution for ease of of exposition and consistency with the provision section, we use the term contribution margin instead of throughput margin throughout this section. Okay, so remember that. So our contribution margin is 240. Okay, so TOC focus on managing bottleneck operations. So as explained in the following steps right here. So step one, what we could do is recognize that the bottleneck operation determines the contribution margin of the entire system. So in PR's example, our output of the assembly operation determines the output of the SM engines, right? So step two, so we want to identify the bottleneck operation by identifying operation with the largest quantity of inventory waiting to be worked on. So as SM engines are produced at the forging operation, inventory will build up at the assembly operation because daily assembly capacity of 300 SM engine is less than the daily forging capacity of 400 SM engine. All right, so that's one way. That's a flag if you guys see that in inventory. Now, step three. So keeping the bottleneck operation busy. Okay, so we're going to keep bottleneck operation busy and the non-bottleneck operation, so subordinates, all non-bottleneck operation, we're going to send that to the bottleneck operation. Okay, that is the need of the bottleneck operation determines the production schedule of non-bottleneck operation. To maximize operation income, the managers must maximize contribution margin of the constraint, right, or bottleneck resources. The bottleneck assembly operation must always be kept running. The worker should not be waiting to assemble engines. To achieve this objective, PR managers maintain a small buffer inventory of SM engines that have gone through the forging operation and are waiting to be assembled. The bottleneck assembly operation sets the pace for the non-bottleneck forging operation. Operating managers should maximize contribution margins by ensuring the assembly operation is operating at capacity by delivering a detailed production schedule at the forging operation to ensure that the assembly operation is not waiting for work. So at the same time, forging more SM engine that cannot be assembled does not increase output or contribution margin, so it only creates excess inventory of unassembled SM engines. Okay. Now, step four, so we take action to increase the efficiency and capacity of the bottleneck operation as long as the increment contribution margin exceeds the increment cost of the increased efficiency and capacity. Okay, so take a look at what we got down here for forging and assembly, capacity per day, right? Daily productions to sale, other fixed operation costs, and then unit produced. Okay, so take a look at that. Okay, so let's go to part two of this. All right, thank you guys.